Well, welcome everyone to this first joint webinar between Merkle Science and Notabene, looking at some of the regulatory challenges the crypto industry is facing in Europe. My name is Pelle Braendgaard. I'm the CEO of Notabene. We help companies around the world get compliant with the travel rule and also deal with non-custodial unhosted wallet requirements that are popping up around the world now. And Mriganka from Merkle Science is also here on the panel today. So if you want to say a few words first around Merkle Science.
Hi everybody. Thanks for joining us. I'm Mriganka, one of the co-founders and the CEO of Merkle Science. So we're headquartered in Singapore, and we provide blockchain monitoring risk solutions to detect illicit use of cryptocurrencies. In terms of my background, I started my career in investment banking at Bank of America. Very quickly, I moved over to the cryptocurrency space. I actually worked at Luno for 2 years before starting Merkle Science. So it's good to see Lucy here as well. And in terms of what we do, we work with law enforcement agencies, blockchain companies, and financial institutions to help them detect illicit use of cryptocurrencies. And one unique thing about Merkle Science is that we use a behavior-based rule engine that looks at suspicious transaction patterns, even for on-chain monitoring, to detect a much broader range of criminal activity. Excited for the panel.
Thanks a lot, Mriganka. We have a really great panel here. So we are representing many different parts of the industry. So we have Lucy representing the exchange part of the world, the VASPs, who are the group of people who are probably most affected by all the new regulations and has most of the headaches. And Lucy is fantastic. And I mean, Luno is such an international company, so you've been having to deal with these issues around the world. And Ian, who's come from CryptoUK, who has been really key part of educating the regulators in the US, in the UK about the technology and leading the industry group there. And Jacek from MakerDAO, who represents really, I guess, in some respect, the DeFi industry, but Jacek's been really good because he's one of the few people I've really seen who's actually taking the subject of regulation very, very seriously and thinking deeply and hardly about it. So I'm really proud to be able to be here in this panel with all of you. But besides my brief muddled introduction, I thought maybe each of you can give a brief, better introduction to yourself than I could do. So Lucy, if you want to start.
Thanks. Yeah, I'm General Counsel at Luno. I head up our legal risk and compliance function. We, for those of you who don't know, Luno are a cryptocurrency wallet and exchange. We were founded in Singapore, but we operate right across Europe, Asia, and Africa. Particularly in the past, we've been focused on the emerging markets. So we have a big presence in South Africa, also in Malaysia, Indonesia, but we really do have a global footprint these days. And in terms of me and my background, I've been with Luno for almost 4 years now. Prior to that, I was a commercial litigator at Allen & Overy in London, and then jumped over to the crypto world.
Great. And Jacek, maybe you next.
Sure. Yeah, so my name is Jacek, and I'm a global legal counsel at the Maker Foundation, which is not the same as MakerDAO, right? I would say that the Maker Foundation is part of the MakerDAO ecosystem, or the Maker protocol ecosystem. So the Maker protocol is indeed the largest DeFi decentralized finance project, which is completely decentralized and governed by the MakerDAO community. And the Maker Foundation is one of the key players in the Maker community, but also with with a very specific role of initiators of the entire system. But right now, I think that the role is extremely limited, and this is probably something that is most difficult to grasp, but at the same time most fascinating. That this is not the usual setup of a corporate entity doing some business, but rather an entity that has bootstrapped a system that is now fully decentralized. And myself, I'm in the crypto world for a long time, for many years, working with multiple projects on the legal, regulatory, public policy side, and very much fascinated about those challenges that we are facing, that we've known about for a long time, such as the clash between the powers of the state and privacy, or how to regulate decentralized ecosystem. It seems like right now we are coming to tackling not just theoretical visions, but practical problems related to those issues. So very happy to be part of this panel, where I hope we're gonna talk about this as well.
Great, fantastic. And then finally, Ian, if you can introduce yourself a bit as well, please.
Hello everybody. Thank you to our host, Notabene and Merkle. It's a pleasure to be on this panel today. Yes, my name's Ian. I am the chair of CryptoUK. We are the UK's trade body. Our primary goal is to advocate at the government level for fair and balanced regulation in the UK. We also work with our partners in Europe, irrespective of Brexit. This discussion isn't about Brexit. I think a lot of our British viewers will have fatigue regarding that situation, and I certainly do. But our main focus is to ensure that the regulation doesn't stifle the industry. And I think we've seen this last year, 2020, somewhat of a tipping point with regulatory clarity, not just in the UK, across the piece. And with that has brought a greater amount of adoption, institutional involvement and focus on this industry. So we think it's key that folks like yourself, industry members and advocates really strive to develop what would be, in my view, a massive industry in the coming years.
Great, thanks a lot. And just a quick note also out to all the attendees. Please feel free to ask questions. There is a Q&A section in Zoom where you can ask questions, and then we will, like 10 minutes or 15 minutes towards the end, then we'll start answering through them, and I'll pass them on to the panelists. First of all, I mean, there's so many places we can start with, with crypto, with regulation. There is AMLD5, there are many different, there's all the new token regulation. There's MiCA. There's the new paper in the UK, Ian. There are so many different places where we can start, but I think the problem that everyone's been looking at most is AMLD5 in the beginning, which is just the initial getting set up, getting licensed, KYC, AML, those kinds of rules. And different countries have taken very different approaches to AMLD5, is my understanding. So there hasn't really been that much of a standardized approach across the union and in the UK on it. So it would be interesting to start with you, Lucy. Like, how have you seen it in the jurisdictions in Europe that you are involved with?
Yeah, I think you summed it up pretty well there. It's disparate, to say the least, in terms of how it is being applied across the EU jurisdictions. I'd say there's definite intent there to get it into legislation, but in terms of how it's actually been implemented, it has made it quite difficult, particularly when you're operating across multiple jurisdictions. One, to understand what the requirements are, and two, to have any sort of uniform approach when each country is approaching things differently. Obviously, the basic requirements are largely the same, But in terms of actually falling within the scope of a particular regime, or sort of understanding the intricacies of each country's requirements, it is very difficult. So I think from our perspective, and I think from the perspective of most service providers that operate across multiple jurisdictions, any form of sort of regulatory consistency or clarity, which it looks like we're moving towards, but it is going to be a good progression from the current AMLD5 implementation.
Thanks a lot. Yeah, and Ian, from the UK perspective, what's the status? I know that a lot of people have been applying for licenses over the last year. What's the status of that? Yeah,
well, I'm certain that a number of the listeners today will be aware that there's been a number of issues in the UK, and primarily that stems firstly from the amount of applications that the FCA, the UK regulator, received. We know that they initially forecast some 80 applications. We know for sure that there were at least 160 received by the deadline at the end of last year. That number, I hear from people in the community, could balloon to over 200, maybe even 300. You compare this to, say, France, which has circa 40 applications. So we have the resourcing issue there that's caused some of this friction, if you like, with applications in the UK being even being passed or having feedback. And so what we had was, at the end of last year, the deadline for businesses to be either told that they were going to get through the application or not, or they had to do some extra work, was getting close. And I think a week or two prior to that deadline, in December, the FCA came out and put in a temporary regime to July this year. So that gives a bit of breathing space to these businesses that are already live and trading. Those that haven't opened up their doors yet, they fall into the sort of same area as previously. But we worked tirelessly at CryptoUK to speak to both Treasury and the FCA that's running the application. Treasury obviously write the laws here in the UK to get something out there, because people were getting worried in the community. And what we generally have learned from talking to members and policymakers that we speak to regularly is that this issue in the UK, and I only speak for the UK, it turned out really to be a catch-22, in the fact that, I mean, the resources at the regulator were strained because of the number of applications, because of COVID, because of the fact they weren't able to physically visit any of the businesses. The lack of knowledge on both sides, both at the regulator not understanding business models, for example, and perhaps complex legal entities exist with some of the applications for reasons that isn't to obfuscate anything, is just because it's hard to get a banking relationship in the UK. So you have to set up all of these additional legal entities to get around some of these hurdles. And then we saw such comments and feedback from our regulator that they didn't like companies double hatting. That is, one individual conducting multiple tasks. They call this concentration risk, which is sort of again, a catch-22. If you're a small startup with just a handful of folks in your business, well, of course, you're going to have to double hat. So we've seen many issues which is still not played out. And right now, we can tell you there's only 4 companies in the UK that have received their license. So it's an ongoing issue that we're working on.
Interesting. Yeah, it definitely can be easy for the regulators, but I mean, it's also definitely not easy for an industry trying to work within this uncertainty as well. Jacek, from your side, has there been, you guys have not, I assume, been directly affected by AMLD5, have you?
Yeah, I think that having this a little bit historical perspective and kind of seeing beyond just the current frameworks and the nearest future is relevant here. Because right now we are finding ourselves in a situation in which everything is becoming super complex, right? Including various business models, technology, but also on the regulatory and public policy side. And then in this complex world of many jurisdictions, including in Europe, it's becoming very difficult for all involved, including regulators, policymakers, and businesses to kind of find their place. And when I look back and I remember AMLD5, which was actually quite a quick amendment to AMLD4. It was not like a completely new directive, but just a few amendments to the previous one. It provided a very clear picture of regulating, or I'm not even sure if regulating is a new word, is the right word. It was about putting new types of entities under the umbrella of AML regulation in Europe. And it was about custodial wallet providers and exchangers between virtual currencies. This is how this legal act calls crypto, and fiat currencies, right? And it was a very good step back then, 3 years ago. It was a very good step providing EU-wide, framework for specific services. Right now, this is becoming very complex because individual countries are starting to moving beyond, and it's not exactly their fault. They're reacting to changing circumstances, and they are also kind of using options that were given to them in the directive, right? So, for example, those individual regulatory regimes or licensing regimes in specific countries, they stem from this directive, and I think that what is needed right now is much more coordinated approach at the EU level, and possibly in the communication with the UK, as we kind of share the legacy system, right? To provide something that would bring all of us to the next level, meaning that there would be a clear framework for all involved, like we had in like the one we had in place 2 years ago. And I think that this is being recognized, but at the EU level primarily because there is a lot of talk about not AML-D6 but AML-R6, R6, right? So in the form of regulation that would be that would have the direct application across the entire EU, and I think that it would make a lot of sense to have this single legal act directly applicable in all member states. Hopefully coordinated with the UK approach, and then defining precisely the scope of services that are subject to the new element regime, benefiting from or using all of that experience of other countries, like the debate in the US right now around unhosted wallets and everything. This is kind of the way I think about that we are in a very specific moment in which we should strive for clarity and and kind of lack of fragmentation and much higher level of harmonization. And if I were to name one kind of conclusion or one wish out of this discussion, that would be it. At least in the area of AML.
Great. No, that's it's good to look back and how the whole thing fits in. And this actually brings me also to one of the next kind of aside question on it. We are very much involved with the travel rule, and many countries have been very insistent on companies implementing the travel rules, such as Singapore and Switzerland and the US. However, EU, there's been some confusion because AMLD5 doesn't actually specifically mention it. However, there is already an existing travel rule regulation that we hear from some regulators that they believe this already covers AMLD5, well, AMLD5 licensed institutions. But there's some confusion on that particular thing. I don't know what others have heard around that. Maybe Lucy, what are your thoughts on travel rule within the EU?
Yeah, I don't think, yes, there are some that would interpret it as being potentially applicable in some places, but I think generally the way it has been implemented to date is only partial, in that obviously the record keeping obligations exist, but the actual exchange of information requirements, I don't think, are there in concrete form. So that's definitely an area where this clarity and consistency is so critical, because for as long as there are people interpreting the regulations or the directive differently as it's implemented in each country, it just makes life incredibly difficult for everybody involved. But it does look like there's going to be movement in the right direction soon. But I would say for now, saying the travel rule is implemented in Europe is probably not right.
Okay, yeah, that makes sense. Mriganka, you as part of Merkle Science, you talk with lots of different VASPs around the world. Oh, I should probably define the term VASP. This is a fairly new invented term invented by the FATF, the Financial Action Task Force. It's short for Virtual Asset Service Provider, and it's the new word for any kind of crypto business that holds the keys on behalf of their customers, I guess, is the unifying factor according to their definition. So crypto exchanges, fiat on-ramps, custodial services, etc. So yeah, Mriganka, what are you hearing out there?
Yeah, absolutely. So I think because our customers are based across the US, Europe, and Singapore, so we definitely see a difference in terms of levels of adoption. One thing we were surprised about is that there seems to be a huge pressure in Singapore for a lot of companies to start adopting a solution, and no one knows what form it would be in, but they're definitely getting a solution or integrating it with Merkle Science or already starting their experimentation, potentially because the MAS had given much stricter guidelines around the FATF recommendation 16. In Europe, there's more of I think there's two sides of the story. Like the more startup type companies, they're still waiting and watching because they don't expect their local regulator to clamp down on this. There's no hurry. But I guess in Switzerland, the more financial institutions dealing with cryptocurrencies, according to them, they've been already implementing some parts of the travel rule because of the fund transfer regulations in the EU. So while they don't really share the information with other VASPs, they have been collecting that information and keeping that with them. And I think that's a step in the right direction. So we're seeing all types of hybrid models. And again, the same applies in the US. Some of the larger companies, because of the Bank Secrecy Act, have been collecting that information already. If not all of it, like some amounts of it on an ad hoc basis or under certain thresholds. But among the larger population, there's still a lot of confusion on how it needs to be implemented. So I think over time, I guess what will happen is people will implement it piecewise, and eventually it'll get to some sort of consensus where there are multiple tools working with each other to communicate this information.
Okay, great. Thanks a lot. Now to maybe shift focus a little bit. You know, we last year saw the introduction of MiCA in the EU, which is the I can't even remember what MiCA stands for. Anyone
Marketing crypto assets.
That's it. Yeah, I should have known that. Yeah, and we also very recently saw kind of the like a UK consultation on crypto assets as well, and I believe the primary focus on a lot of these is more around tokens and token issuance and governance around those. And one of the things that that the crypto press at least started saying when MiCA came out is, oh, DeFi is now in trouble in Europe. And I'm not sure that's exactly true. So Jacek, what are your thoughts around that?
Yeah, sure. That's a good question. And actually, I have many thoughts about that. We don't have that many hours to cover the topic in depth. But yeah, it's just to like explain to everyone so that, you know, there is for those that do not know much about this. This is a regulation which is very long, right? It's like 150 pages, which is the first such comprehensive approach at the EU level to you know, regulate crypto sector or crypto industry. And the title says everything. This is markets in crypto assets regulation. And this is exactly the goal, to regulate those markets. Now, in terms of the scope, it is quite wide. And it covers some activities that I think should be regulated as soon as possible. Like, for example, it regulates things like market abuse or market manipulation on crypto asset markets. Something that, for example, in the US or in a few other places was subject to regulation for a long time, if not forever. Now, we all know that this is sometimes a completely wild west in terms of crypto markets. So this is very much needed. But that doesn't mean, I think, at the end of the day, that everything is covered by this regulation, because this is a legal act that covers specific models. It basically covers two main things. The first one is about issuance of assets, of crypto assets, divided into a few categories, right? From the, let's say, the broadest one, just crypto assets, to the strictest one, e-money tokens. And besides that, it regulates a set of activities which are called crypto asset services. And there is, it regulates crypto asset service providers, which this category is more or less similar to VASPs, as defined by FAT glossary that you mentioned, Pelle. But also it's a set of activities that is very much similar to financial intermediaries regulated by MiFID, the cornerstone of EU financial services regulation. Now, this is all perfect, and I think that it makes a lot of sense to directly regulate and license players like cryptocurrency exchanges, investment providers, and a set of those issuers and set of those like models that are regulated on traditional financial markets. And these models do not differ much. I mean, this is about different types of assets, but you have pretty much the same business and the same risks applicable to players that are doing that business with respect to crypto assets, as opposed to, for example, financial instruments on traditional market. So when you look at the legal act itself, this is exactly what it covers. Now the question is, what with all of those decentralized models? Because what I've said, as you can see, this is about coverage of centralized models primarily. And there is this question whether the MiCA regulation and how and whether it covers decentralized models. And my answer as a lawyer when reading the text is that it does not, right? Because it really regulates specific models like issuers and all of those providers that I mentioned, and those decentralized models are not covered. Now there is a debate in the union about whether that should be the case or not, and whether this is actually the case or not. And there are many people that disagree with me, saying that, hey, this regulation puts forward how those services can be provided. And I'm oversimplifying it now, but some people say this is how that should be done. So if there is no centralized issuer, conducting this activity in a decentralized manner is illegal. This is like the essence of this argument. And I think that this is fundamentally wrong. But there is this lack of clarity. And I think that this is why this is becoming a top topic right now in these discussions, because there is this risk that by regulating all of those centralized models, but not providing clarity with respect to decentralized models, we are kind of pushing the latter into the gray area, right? So that they do not really know, or those products do not really know whether they are legal or illegal, or how they could make themselves legal in a way. And this is extremely dangerous because look, I mean, decentralized models and DeFi is actually a huge opportunity for the union, right? Like for this jurisdiction that is very much afraid of big tech and big providers coming from outside, and taking over some level of sovereignty from the European Union or particular member states. Decentralized models are actually a great hope. So this regulation, if anything, should embrace those models in some way. But again, speaking as a lawyer, I do not think that's the case. I do not think that these models are actually covered. Of course, always devil is in the details, right? That it depends on particular model. But I think that legally, this is a very clear picture. But we need this debate right now in the union to really sort it out, especially that if we leave some uncertainty, if we leave it, not decided, you're going to see a lot of fragmentation across member states. And this is something that should be avoided at all costs. I mean, the goal, as stated by the Commission, is to decrease the level of legal uncertainty. If we leave it as it is, with this uncertainty, this is going to be much worse.
Thanks a lot. Just one very quick little side question that you made me think of when talking about this subject. Wouldn't a good regulatory framework for the actual tokens and for token issuers actually also help out something like Maker, which relies on collateral, on collateral in existing tokens? Having a token framework like Mica help create better and better regulated and more trusted tokens that you could then use as building blocks?
Yeah, I think that the main challenge here is that there is no, I think that there is no dispute around the topic of regulating specific assets, right? You can, like, for example, you can regulate, like there is a very broad definition of e-money tokens and even much broader definition of crypto assets. And I think that's right? If you regulate those tokens, and like, for example, intermediaries that are using those tokens, it's completely correct to have a strict regulation in place. At the same time, if you're regulating things like issuance, governance mechanisms, and all of that, and you really care about those values that are mentioned at the very beginning of this legal act, like technological neutrality, and you really care about making this regulation future-proof, like the intention was of the Commission, you cannot just stick to regulating specific models, which is the case right now. You cannot, I don't want to hijack this panel, but let me give you one very good example. You have GDPR, which has an extremely broad concept of personal data. But what is actually regulated are centralized data controllers that process the data. And now you have question, what with data processing in decentralized networks? And this confusion, this uncertainty is the precise reason of people not building businesses with respect to or building on top of the idea of decentralized data processing in Europe, right? So we are kind of pushing this innovation away, even though it would work best in our approach of privacy-focused, systems. And we are facing the same problem here. We have the super broad concept of assets that want to be regulated, but very specific catalog of providers, leaving everyone else in a gray area. And we have to sort out this gray area right now, so that all of those players, all of those models that are truly innovative and truly bring a lot of potential to solve some fundamental problems, they are not pushed away.
Great, thanks a lot. Very good answer. Ian, what about the UK perspective? Is with the new consultation paper, and any big problems you see with it, or opportunities for the industry?
Yeah, I will give a brief overview of what we've seen with the UK's version and make some comparisons and some stark contrasts with Mica. And yeah, it was an enormous consultation. Mika, we responded to that, and I recall there being, some 160 questions. But so, yeah, this consultation from Treasury was released a few weeks ago, focused on stablecoins and also crypto assets in general. It's due in March. We're going to run a working group to respond to this. And so the summary from what I've read and our conversations CryptoUK with Treasury is they're really just seeking information at this stage. They're not really prescribing any comprehensive regulation, which is in contrast to Mica. So the first thing to note is they're sort of devolving power to individual agencies. So they talk about in their consultation that they want the FCA and the Bank of England, for example, to be more adaptable to the dynamic environment. We welcome this because we know this environment is dynamic, but also caution against what we saw with FinCEN and then perhaps the jams for at the end of last year for non-hosted wallets. We need good dialogue with all stakeholders over a prolonged period of time. They also sort of give us the impression that they're not going to, we know they're not going to regulate payment tokens or utility tokens. So security token, similar to Mica, fall under the current regime. So in the UK, FISMA and MiFID for Europe. And then with stablecoins, they've gone slightly different as well. And they've not gone with the e-money / asset reference, significant asset reference token approach that we talked about previously, but more just looking at covering off just sort of basic stable coins, and not even, and there's even a reference actually to DAI, for example, which is a significant asset reference token within MiCA, but they actually call out and say algorithmically based stable coins are out of scope, and they believe that they have the same risk profile as a utility token or payment token. So out of scope in the UK. So what we've seen in general with this consultation is a sort of hands-off approach right now, wait and see, if you like, and also looking to see what the rest of the globe will do in terms of, say, you know, OECD and some of the supranational organizations. They do talk quite a lot about financial markets infrastructure and DLT being able to, you know, support some of the developments in the financial ecosystem, whether it be execution, settlement, custody. So they're looking for responses there. They're not predicating any particular regulatory clarity at this stage. But I think it's worth sort of just touching on the area that I find interesting. So with MiCA, they talk about having a custody reserve requirement if you are a algorithmic stablecoin or a significant stablecoin. So that could fundamentally change the business model of certain projects such as MiCA. So yeah, we see the UK as perhaps having this approach that is pro right now, and there might be some people that don't agree with that. But we've definitely seen some words coming out of our senior government, and especially the Chancellor, the financial industry here in the UK and broader financial technology. We want to attract investment, which causes a lot of concern, I suppose, and debate in Brussels. So it'll be interesting to see how it plays out in the next year.
Great, thanks a lot, Ian. So now I just wanted to bring it a little bit back to the travel rule again. And Lucy, you've already been, you know, as part of Luno, you guys have already been working with the travel rule, like from the point of view of Singapore for a while, and analyzing the impact on your business and how you're going to manage that there. I thought it'd be really useful for VASPs in Europe who haven't started looking into this yet to maybe get your perspective on it. And then one thing that I thought would be interesting is most crypto regulation, it's very much related to your home jurisdiction in many cases, right? So you fulfill the requirements of your home jurisdiction. But an interesting thing about the travel rule is essentially you have to now work together with another VASP. And that starts becoming more tricky, because then it's not just your own regulator that might be taking a wait and see. It may also be your counterparty VASP actually has to and will have to require the travel rule. So how do you see that that panning out over the next year?
Yeah, I mean, that's one of the definite challenges. So as you mentioned, we come within the MAS in Singapore's jurisdiction. So we are very much advanced in our travel rule compliance implementation. But like you say, the major, one of the many complications is that it's far from implemented in every jurisdiction which our customers send and receive cryptocurrency from. And where we have requirements to obtain information from the counterparty VASP or send information to the counterparty VASP, there's first the concern just about getting the information or who to send it to. But also, if you're sending information, you're obviously worried about protecting your customers' data and making sure it's going somewhere where it's also going to be protected. So I think in terms of what I would suggest people do is first to think about this early, not wait until it's upon them, because it's a big undertaking and it's something that everyone's going to eventually have to do. But I think the two main things is industry cooperation. VASPs everywhere need to be speaking to each other talking about solutions, interoperability of solutions, making sure that there is a way for these cross-border sends and receives to keep going, because obviously if there's no coherency, there is always going to be the risk that the regulators just say, if it's not a VASP that has travel rule obligations, you can't allow sends to it, and that's not going to work for anybody. So I think industry cooperation is really important, working with the solutions, obviously, to find ways to make interoperability wider. But I also think there needs to be broader conversations between VASPs and regulators, because I think sort of an approach from the regulators that's too firm in terms of travel rule obligations where it's not globally required is going to be a real problem for the industry, and I don't think that's what the regulators want to do. So I think engagement, make sure there's full understanding between industry and regulators as to what the obstacles are and how they can be met in the short term. I mean, there are risk-based approaches we can take to mitigate the risk that the travel rule is trying to work on, even if that doesn't involve, strict letter-by-letter compliance with recommendation 16. I think it's going to have to be iterative, and I think there's going to have to be a lot of cooperation right across the board.
Yeah, thanks a lot, Lucy. Mriganka, what are you seeing? I mean, you have a lot of customers in Singapore as well.
Yeah, so it's pretty much similar across, like in terms of what Lucy said. I think because the MAS is a lot more proactive, so companies have definitely started testing it out, whereas in a lot of other jurisdictions, they've left that for like later, saying that we will solve for the travel rule. I think it's actually going to happen. Of course, there will be several iterations across everywhere else. 2 years ago, I might have said, okay, maybe this is going to take like a lot more time, but I think we are seeing smaller sort of experiments across groups of exchanges, and all these exchange working groups and bilateral relationships have started becoming important as well, right? So I think typically then the exchange will just exchange that information even directly, or even without a provider. If they have to do it, it'll just bring up the cost of compliance, because you need like manual people and like processes to get all that information, etc. Right? And the second thing I think is, like Lucy said again, is like interoperability, collaboration. Like the two things she mentioned, right? The sunrise problem, as well as the other major thing we saw in the beginning was that all these other tech providers like Notabene and a few others, nobody was sure whether it would work, because player A uses Notabene, player B uses somebody else. So how would it end up happening? But then I think now all the tech providers are expanding their scope to be interoperable, receive information and send information to each other. So it's just a natural evolution. And of course, it does mean that the industry will mature. And overall, I guess it's a net positive, because more financial institutions will be interested. As I gave that Switzerland example earlier, they've already been collecting some of that information because of their other licenses and funds transfer regulations. So now everybody has to do it. So it's no longer a burden on some who are more regulatory compliant. But of course, it will have like some amount of iterations where every different country has to figure out how they're going to do it. And the major problem is, what do you do when there's one country that has very lax regulations and one country has very strict regulations against the travel rules? So, and I haven't seen any Singaporean companies ban those transactions yet, but if that's going to happen or not, that's definitely something worth thinking about.
Okay, yeah, I can. I'll permit myself also to just comment a little bit in here as the moderator. We've heard from several of our customers that they have actually since early last year, they actually started limiting transactions outside of Singapore, and just mainly allowed, national transactions in the beginning. On the solutions, there are many different solutions, and interoperability is definitely a big problem. Please feel free to reach out to us at Notabene. Apologies for a quick little sales pitch in here, but we can actually help you even without going in, getting fully compliant, integrating it in. We can help you start getting prepared, and also being able to respond to incoming travel rule requests from, for example, Singaporean VASPs. So you can help them become compliant. Yeah, well, I think that was very useful. Now, travel rule is one side of a transaction, and the way that we look at transactions is that the regulators have been particularly interested on figuring out who the counterparties are to a transaction, and the travel rule is one aspect of that. So the travel rule is required between exchanges. So whenever a transaction goes between, say, Luno and Coinify in Denmark, for example, to just mention two exchanges, then the travel rule would be required to pass personal data across there. And so there's the requirement to understand who the counterparty institution is, and also share information about the originating customer with the beneficiary institution. But there is another aspect to this, to understanding the counterparty. There's the unhosted wallet or non-custodial wallet. I think the industry, we've typically called it non-custodial wallet, but regulators seem to really enjoy the term unhosted wallet. So I see that getting more and more used. And Singapore has had a quite strong view on that, or MAS in Singapore has, FINMA Switzerland as well. Most recently, we saw the Netherlands, as part of their licensing requirement, they've had licensed institutions have to come up with somewhat complicated solutions to solve figuring out who's behind a counterparty, who the counterparty is to an unhosted wallet. And the entire US crypto industry spent all of Christmas writing their response letters to FinCEN on their new requirements and unhosted wallets. So I think it's something that we're going to see, and at our meetings with FATF, it's definitely a big concern who's behind these unhosted wallets. But unhosted wallets is the foundation and really of our industry. So Ian, first of all, like what are you seeing in the UK and then broader in Europe as well on that issue?
Well, I was, much like a lot of people in the community, horrified to see what the US Treasurer did on his sort of final few weeks in office to put out a very, very important piece of suggested legislation to give the community 2 weeks to respond. That is just insanity for my view. So I was very good to see the community respond in tens of thousands of objections, and even from Department of Justice and other agencies, we know that this was never going to fly. So look, I guess from my viewpoint, and this is just my personal view, I think some form of regulation is coming. So would that mean that non-hosted wallets, non-custodial wallets will be treated in the same way as centralized exchanges or VASP, for example, or other market participants? That there will be some level of KYC and AML required. Now, should that be at a de minimis level? $10,000 was suggested in the US. Is that the right number? I don't know, but I do think that this is something that's coming. When I spoke with Treasury before Christmas and we talked about the FinCEN ruling, the UK has no desire to do anything right now. But as I said before, they've got this sort of wait and see and dynamic, nimble approach. So we could see something happening. They did mention in the consultation that they're looking at DeFi, but they're not going to do anything about it. So that sort of feeds into that. So from the UK perspective, wait and see, nothing to worry about. But the direction of travel from my side is, the check is in the post. you're a regulator, you have to look at the risks of economic crime, and unfortunately the industry does have these perceptions that there is nefarious actors using and moving monies around that they shouldn't be. So yeah, I see it happening.
And Lucy, how are you guys approaching this, prepping for any of this, particularly in Singapore?
Yeah, I mean, I agree with Ian. I think something's inevitable. I think a lot is going to hinge on what happens or what comes out of the US. I very much hope we don't end up going down a sort of Dutch or Swiss approach, because I don't think it's workable, especially at scale. So at the moment, we're looking at what our options are, what the potential requirements might be. At least in the short term, we propose to take a risk-based approach to obtain the information we can on the unhosted wallet, recognizing that it's not always going to be possible to have complete certainty. But yeah, it's a wait and see approach in terms of the concrete requirements that we're going to be under.
Yeah, and thanks, Lucy. Just finally, Jacek, any comments? I mean, on that, because I guess it's something that would directly affect the DeFi world if this becomes a major problem.
Yeah, I think that in the context of traditional financial system, the way it works and the way AML regulatory regimes are designed, travel rule makes perfect sense, right? And it's been with us for a long time as a certain set of requirements regarding wire transfers primarily. Now the question is how to use this type of experience or this type of regulatory method tool to this new world. And in the context of centralized intermediaries that facilitate movement of money in some way, that definitely makes sense, right? I mean, there is sometimes, I'm not saying that often, but sometimes there's just not much difference from a wire transfer than from one bank to another. Than in the case of some crypto intermediaries doing a similar transfer from one hosted wallet or custodial wallet to another one. But the case here is that it's not typical, or rather what is typical for blockchain-based systems or just blockchains, open and public permissionless blockchains, is that you have those non-custodial wallets. But actually, I would look at it from the other angle. I mean, what this wallet or this technology gives you is the power to self-custody your own assets, right? Something that wasn't really possible for any other type of digital money. And this comes with certain advantages, right? Like, for example, the fact that if you're in your own self-custody, there is no counterparty risk that you're bearing, right? Which is actually something that is a major concern in financial regulations. I mean, the fact that there is a counterparty that is holding your assets, is custodying your assets, was usually the reason for having a very strict regulation of such players, right? Which are those counterparties and can do something wrong in some way, or something wrong could happen to the assets that are not theirs but someone else and just custodied or held by them. In this case, you get rid of this risk, right? So there are clear benefits. Now the case is the question, I think, is mostly technical, how to adjust this AML regime to this new reality. But I truly think that we should approach this from the traditional perspective of same risks, same business, same rules. Here the business is different, totally different. This is a completely different situation when I held my own assets in the blockchain wallet as compared to money held on the bank account. Risks are different. As I said, those risks, I'm not saying that they do not exist, but they are just different, and they're much lower in some aspects. So the rules should be different as well, right? So copying the rules from the traditional financial system and just applying them here, that just does not make any sense, and that would be counter-effective basically. And of course, that's easy to say. More difficult is to propose an alternative mechanism, but that's why we need this dialogue. And I really hope that this overview, this process that is going on at FATF right now, this opportunity to really do this, this review of the rules, will be really used to not just, you know, to really think this over, you know, to really think about this, so that we end up in a situation in which those risks are addressed, yet we do not voluntarily remove all of those benefits that this technology is giving us. And yeah, let me leave it here at the very general level, because I think that we are running out of time at this point.
So Pelle, we actually have a lot of data on this as well. So like, for example, what you should look at is what percentage of criminal activity happens via unhosted wallets. And you should compare that to the costs that you're bringing about on the industry, right? And I think in our analysis, we saw that at least 80% of unhosted wallets, 70 to 80%, and we're still refining this, so very early days of the analysis, but they originate from WASPs, and at least 60% of those funds go to WASPs as well, right? And whenever there is a money laundering activity or something like the Twitter hack, the very fact, I mean, it's counterintuitive, but because this particular unhosted wallet regulation doesn't apply, law enforcement is able to catch any criminal using an unhosted wallet because funds end up at a WASP, right? So if you implement this, then essentially all those criminals will go underground. They will no longer use unhosted wallets. They will, or exchanges or WASPs, they'll try and use mixers more. So I think that's definitely one of the points to consider, like when jurisdictions bring this about, that you might not be stopping the crime, you might just be making sure that the crime doesn't get caught, or like better methods to evade crime come about. And the second point, again, I think this was in addition to Jacek's point, right? So the blockchain has a special feature that everything is available openly. So you can, to a certain extent, measure AML risk for unhosted wallets by using blockchain monitoring. So this didn't exist in financial markets, which is why you would have to collect that information every single time. But if you already have tools in place or an iota of risk that you're already removing by monitoring it, then overall, like, does it really solve the purpose? Like, you're increasing costs for the industry substantially. You may or may not remove money laundering. You might actually make money laundering more complex rather than it being the ideal outcome where law enforcement finds out what's happening and they catch criminals by simply like contacting the WASP or like producing a subpoena and getting all the information around that. So most crypto hacks get caught that way. But if this happens, then those hackers will probably use a different method altogether.
Yeah, I agree. Really, cash does not have something like Merkle Science, or it's very difficult to do that through the traditional payment system today. And it really shows blockchain analytics companies like yours have really shown the power of it, and really that it is a much safer, less risky technology as a whole. So we're really coming up to the end right now. We're already a little bit over. If everyone's happy to stay for like just 5 more minutes or a couple of questions, so we can just very briefly go after, but we should try and close them out in 5 minutes for sure. One question is, what is the timing coordination in AMLD5 between the UK and EU countries? What's the wider coordination amongst global regulators? Maybe Ian, that's one you can take.
Sure. Yeah, just briefly, as I know at times a factor, the UK set its deadline for the end of December for applications. As I said, that was extended due to the volumes. I know France had a deadline that was a similar date, but the overall, each jurisdiction can opt for a different implementation. So this isn't directed by Europe a specific. Well, there is a direction that you have to do within a certain amount of time, but they don't tell you what that time is. So there are differences across Europe.
Great, thanks a lot. And there's another one which is probably best answered by you as well. So who's captured by the UK crypto assets regulations? High value transactions, arranging the exchange of fiat crypto or crypto, or greater than 20% of business in crypto.
Yeah, well, my sense is, I haven't been through any applications, and I'm happy to give my details to introduce Paul to some people we work with that are working on these applications. High value transactions, there isn't a de minimis, so any crypto transaction is in scope. Fiat to crypto, crypto to crypto in scope. If you touch in crypto in any shape or form, then you're in scope. And what we say to people, I do get asked the question, like I'm an OTC desk, I'm just trading on my own account. I'm not touching any customer information. Should I even apply for this? Probably yes. If you get involved in crypto in any shape or form, you should definitely, as a precaution, reach out to a professional lawyer. I'm not a lawyer, I'm not giving any advice, just to see if you are. And we talk to lawyers all the time that have projects that are creating blockchains and issuing native tokens for security token offerings of an underlying real world asset, for example, and they're in scope because it's a crypto and they want it to trade on a secondary exchange. Well, if you don't want to be in scope, just use an SQL database and issue a share certificate. So these discussions are going on. So yes, seek professional advice.
Great. Well, I think that's good for now. I think this has been a really, really good discussion. We covered a lot of different subjects here. And some of them don't seem that related at the moment, things like MiCA and travel rule, but I think we'll see a convergence. This is all going to be important. It's all part of growing our industry and, well, dare I say it, grow up maybe a little bit as an industry, being able to serve much broader use cases than we've done in the past, and also expand more into the traditional financial industry. I think it's an exciting time, and we've covered some fantastic subjects. I want to thank everyone on the panel for joining and attending, and all the attendees as well. We'll send out an email with a link to the recording afterwards, and you'll be able to contact me directly at Notabene, Mriganka at Merkle Science, and Ian at CryptoUK. Lucy and Jacek, I assume you guys would like to be spared a lot of incoming requests, but you can reach out to us. And again, thank you very much for coming here, and hopefully we can have more of these sessions in the future.
Thank you so much. Bye, everyone.
Thank you, everyone.
Bye-bye.
Bye.
Thank you. Bye-bye.